Hi, I'm Seth Freuberg. I'm the Director of Options Trading here at SMBU in Manhattan. I'm also the head trader of SMB Capital's Options Trading Desk. So today I'd like to talk about a very important topic, which is how traders trap themselves into trading failure. I'm going to focus on options traders because that's my area, but this can happen across all forms of trading actually. So let's get logical as a starting point here. Most traders who attempt to become profitable and trade for a living, most of them actually don't succeed. Less than 50% succeed. Some people would say less than 25% succeed. Yet, I can bear witness to the fact that there are people who trade for a living. Some people trade for a very nice living. You've probably read about some of those. There's a large number of people who would like to be like those traders who successfully trade for a living, but in fact, very few actually do make it. So the question is that because those successful traders are so brilliant? And I would say most of them are intelligent. Most of them, I would say, are at least above average intelligence compared to the rest of the population. But there aren't that many Einsteinian geniuses in the group. There are some, but more often it's just someone with reasonable intelligence and a couple of other important personality attributes. So, in other words, as long as you have a reasonable level of intelligence, you should be able to make this work. So, why don't more people make this work? Why don't more people who want to trade for a living succeed in trading for a living? And the answer is simple. It's because they trap themselves into failure by not preparing for the learning curve. That's really, really important to understand that there is a learning curve in trading, in options trading specifically. So what happens? How does this trap occur? In what way are people trapped into a failure formula? The first aspect of this trap is unrealistic expectations. And what I mean by that is there is no other skill in life where you practice for one day and you become a prodigy. You practice for one day and you become a professional. It's ridiculous. No one sensible thinks that that's possible. Well, the truth is with options trading, to become consistently profitable, the fastest I've ever seen is 6 months, and I know someone who it took 4 years, and then he became consistently profitable. Both those people, by the way, are trading on our options trading desk today. So somewhere between 6 months and 4 years is the answer. The 4-year guy was probably an outlier in one respect, and the 6-month guy was probably an outlier in another respect. Somewhere in there, I would say a year or two, it should take a reasonably talented person to become consistently profitable in options trading. So, if you cannot afford to live with very little, if any, income for a year or two, you can't trade options full time. You certainly can't trade market neutral options full time. You have to learn slowly and gradually, and you have to build your skills over time, just like any other skill in life. The second unrealistic expectation that is set up is as to return. There are people who trade options and they will make 50% on their capital a year. I know people who can make much higher percentages than that on their capital per year. All right? However, were they there the first year they started trading? No. I can tell you almost definitely they were not. And to get to a 50% return makes you an extraordinarily good market neutral options trader. You know, you'd be in the top 5%, probably the top 2%, okay? If you're willing to be in the top 10% even, you're probably going to have a lower consistent return than that over time. So if you think coming out of the blocks that you're going to learn in a month and you're going to be making 50% return a month, you're just being ridiculous and you're being unrealistic and you're setting yourself up for almost sure failure. So given these unrealistic expectations as to time to competency and as to potential for return, then it's kind of easy to see what happens next. The trader starts out with very little funding to support him or herself during the learning curve period. He or she runs out of that funding. During the learning curve period, you're very likely to be losing a little bit of money or breaking even or making a little bit of money, but certainly nothing to live on. And in fact, the greatest likelihood is you're probably losing a little bit of money, meaning that your capital that you're trading, once you run out of the funding you've set aside, now your capital becomes the way you fund your life, meaning you have less capital to trade in the first place. So now you're losing money, you're trading less capital, you've run out of money, and it results in your having a smaller account. And at that point, then some people start panicking. They think, uh-oh, this isn't working. The 2 months of funding I set aside for myself to learn how to trade consistently so that my trading became my replacement income, that's gone. And in fact, my capital has now shrunk because I've dipped into my capital in two ways. One, I've lost money trading. Two, I'm dipping into it to pay my expenses. All of a sudden, this unrealistic dream is starting to fall apart. And then the worst thing happens. And the worst thing is the trader does something really dumb. He decides in desperation to put on some kind of a really risky trade that has very little sense to it. But if it works out, you'll be able to restore the capital in your account. You'll have some extra funds. Everything's going to be wonderful. And you, for some reason, have convinced yourself this trade is going to work. And once you get into that mindset, at that point you're gambling, and it's just a matter of time before you blow your whole account up with that kind of thinking. So it starts out innocently enough. You think, hey, these guys are trading for a living. I want to trade for a living. That seems fun. That seems great. And it is fun, and it is great. But if you do it in a way that's immature, that doesn't take into consideration realistic expectations, you're almost always going to fail. And then you have to start polishing off your resume for some other career. So all of this can be avoided if you just stop and think before you take the steps necessary to become a consistently profitable trader. And first of all, you have to get an education. You almost definitely have to get a mentor to work with you, because a lot of this is nuanced stuff, and you need someone to kind of hold your hand through it and warn you, and all the good things that a mentor does. So assuming that you are dedicated to proper education, you've got to then have set aside, in my view, a year or two of funding to essentially finance your learning curve. And if you can't do that, then either you need to save up and have some other career in the meantime, or in options market neutral trading like we do on our trading desk, you can stay in your job and actually experience the learning curve without losing your ability to make a living. So that's actually a really positive benefit of the type of trading that we teach at the Options Tribe. But with that as an aside, if you don't have a way to fund your lifestyle and you think your brand new trading career is going to do it, I am here to tell you 99 times out of 100 it is not going to do it, and instead you're going to go down the pattern of failure that I just described. So have a funding. You must have an ability to make a living and cover your living expenses while you're learning for a year or two. Then when you get started, once you've gotten your education, once you have your mentor, you've got to then backtest extensively the strategies that you're attracted to, paper trade those for at least a month or two before you start live trading, and then most importantly, live trade very, very small until you become consistently profitable. If you live trade too large initially, you're going to blow yourself up. But that's another story for another day. But during this 1 or 2 year period, you've got to live trade very small, because the likelihood is you're not going to make that much money in the early going. So why trade it large, especially when the more likely outcome is not only won't you make money, you'll probably lose money. So you might as well lose less by trading smaller as you take your lumps, as you pay your what they call additional tuition to the market for you to learn how to become a successful options trader. But the most important thing I can tell you as far as how to avoid these traps is you've got to find your bread and butter trade. You've got to find the trade that when you put it on every month, you say to yourself, I know why I'm putting this trade on. I know how I'm going to exit if I'm losing money. I know what my target profit is. I know how realistic it is. I know a lot about this trade, and I feel very, very comfortable trading this trading style. And then if you've done that and you're trading small, remember all this is predicated on your trading small, and you have month after month after month gotten an increased comfort level with the trade. That doesn't mean you're making money on it every month. It means you're learning and getting better at the trade every month. Only then can you start to say to yourself, wow, if I can do this on a very consistent basis for a year on a small amount of capital, maybe I can start doing this on a larger amount of capital. And when you start doing that, and you start feeling that kind of confidence building in a strategy that has, and you've experienced winning months and losing months in that strategy, yet you are still comfortable with that strategy at that point, then you can start to think about slowly increasing your capital level to the point where maybe one day you can make a living doing this. But it's like anything else. If you want a baseball analogy, one of the greatest books written on hitting is by Ted Williams. If you read that book, are you automatically a 400 hitter? It's ridiculous. Okay, that's a very, very, very and maybe solid starting point, but that's all it is. It's a starting point. You've got to get out there and you've got to hit and hit and hit and hit and hit until you start to become consistent and improve in a consistent way. And then you can start to build your capital level and perhaps trade for a living. So please don't trap yourself into a failure formula. You've got to think about things in a realistic way. You have to build your trading skills. If you believe you can just quit your job, put up a bunch of capital, have no extra funding at all on the side, and just start living off of your trading a month after you learned a couple strategies, I can virtually guarantee that you will fail. So please do things the right way, do things in an organized, realistic way, get your expectations right, and then you actually do have a chance to become a consistently profitable trader. Thanks very much, and we'll see you next week. We've put together a series known as the Super Simple Spread program, and we're very excited about this series. It was produced and designed by John Locke. Many of you know who John is. He's also, maybe less well known, is the top trader on our options trading desk here at our proprietary trading firm in New York. He designed these trades and he trades them personally. We also have a number of other traders on our desk who have learned these strategies and are applying them very consistently and profiting very consistently from them. We're putting our firm capital behind these strategies, and that should mean something. And we are now giving you an opportunity to learn these very same strategies. A great part of the Super Simple Spread program is the fact that it does not require a lot of screen time. These are easy trades to manage, and you don't have to sit there staring at your screen all day. And if you do have other trades on, you won't have to spend too much time focusing on the super simple spreads. They are designed for the trader who can't necessarily be in front of his desk all day. So I'd encourage you to seriously consider the super simple spread program. I think you'll benefit from it. We're putting our money behind it, and I would encourage you to seriously consider doing the same. So thank you, and I hope you enjoy the series.